Thank you so much, and a very good morning to Kuala Lumpur, everybody. It's great to see so many people here early in the morning. When I walked in half an hour ago, it was more or less empty, and now it's more or less full. So clearly there's a lot of interest and attention for the palm oil industry here. My name is Bloemendal. I'm the founder and owner of Pretb. Pretb is a consultancy firm, and we specialize in assisting companies to improve your margins and basically make you future ready. So today my topic is the future of palm oil, not really the past and not really the present, but really looking at what is going to change in the next few years, what is going to change even 5 or 10 years out, and don't see me as a guru or anything, but trying to help you in finding ways to structure your own way. But before we go on, I would like to specifically thank the organization and Datuk Dr. Kalanya Sudram for inviting me here today. It's always a pleasure. And hopefully with my 34 minutes, I can get a few topics in your mind that we can discuss the next few days. Some of them will be controversial, some of them will not. Some of them will be discussed later on in talking about sustainability, we're talking about IT systems, and others are basically up for discussion at a later stage if you're interested. Just a very brief business about what my company does. I have a history of trading. I'm ex-Cargill, Noble, Ruchi, Citibank, and a few other companies. But currently I'm using my network and I'm using my history in this business to help other companies out. I really believe that you don't need to reinvent the wheel. You don't need to invent in research desks. You don't need to reinvent in expensive SAP systems. Just go to the right companies for it. And if you go to an oil world, they have fantastic research. If you go to Rabobank, they have fantastic research. If you go to other companies, they will give you what you need without you having to do it yourself. How do we do that? We use a strategic shared knowledge network. Literally what I said, I introduce companies to companies that have already done it before. If you do that, you're quicker in moving up the value chain. Some of the companies I work with, and then I'm going to end up this little promotional speech, Transparent on risk reporting, risk management, my old company Arcadia and Marek Solutions. Compliance, which I'm going to talk significantly more about today as well with a company called Datarama. Physicals and e-documentation. There is a load of opportunities out there for companies like yours to move into the future. So let's go to the topic of today. The Malaysian Palm Oil Council have asked me to give a bit of a non-traditional overview of some of the major changes that we have seen or that we can expect. So for that purpose, I'm not going to talk about trading. I'm not going to go in depth into supply and demands. We'll have all the 3 major speakers here, Thomas, Dorup, and James. I've seen them all this morning already, so I leave that to you. I'm not going to give any price forecast. I'm not going to give any S&Ds. But I'm going to take you through the variables that I think will be able to make your life easier or more complicated. Just a little note, none of this information is private. It's all coming from public sources. There's quite a few. I've tried to mention them all in my presentations, but if I forgot you and you see your name or you miss your name, you're well recognized by me, and apologies if I did so. So the theme for today, next level opportunities, or how to manage risk in a time of massive macro, political, technological and general change around us. And trade barriers. Everybody talks about the Chinese trade barriers, but a trade barrier can come from various angles, and we're going to touch a little bit on that. So the outline for today, it looks much more extensive than it is. Don't worry, I'm not going to bother you more than the allocated time. Mega trends, what's going to happen in the next 5 to 10 years. Historical dynamics, basically what did we do 10 years ago, 15 years ago? What do we do now, and how are we going to trade, or how could we trade in the future? Very briefly on CPO, key price variables, basically because everybody likes to see that. Long-term palm oil supply and demand. What do we need to do to make sure we can feed the world in the future? Trade barriers, social media, compliance, sustainability, and technology. Not the traditional topics you would see at a conference like today, but hopefully you'll find it in a way interesting. Let's start off with the mega trends. So basically, we'll have a look at the world around us, at the largest sand of the world. Where will we be? What happened? And how will it impact the global need for food on the long run? And for your information, in this context, the long run here is anything more than 3 years. So basically, if you would plant a palm tree right now, what's going to be the effect on that palm tree 3 to 5 years onwards? So the basic one, just a very general one, world population growth. As you can see, we've grown immensely. As per the United Nations, we're currently around 7.6 billion people. and it grows more than 225,000 people every single day. So 82.5 million people annually at a growth rate of about 1%. These people will have to be fed. And it's not just the amount of people, because the high growth countries are mainly in the emerging economies. Out of the top 10, only the US is in the high growth areas. It's China with 1.4 billion, India, Indonesia, Brazil, Pakistan, Nigeria, Bangladesh, Russia, Mexico. All of them are growing at a rapid pace, and they're getting a lot more people into the urban area. So out of the 7.6 billion right now, 4.2 are already living in cities and only 3.6 in the rural areas. And that ratio is actually going to go down. So by 2025, the population will be almost 8.2 million. So 600 million more people than we have today, and 500 million of those are going to live in cities. So they will not be available to work the land, to make sure people are fed. They have to be fed by someone else. And that's a key change that is going to change the way how we operate and how we see our trade flows. So all in all, demand for resources, for everything, for energy, for food, for housing, it will grow exponentially. And at current unchanged demand rates, we will need almost 8% more of everything just to sustain our way of living. But not all growth is equal. And this chart shows that. The real growth is really not in North America. It's not in Europe. It's a little bit in Latin America. But it's Africa and Asia that you have to focus on. And we all know that. But for some people, they always tend to think, well, the real demand is coming. We have to look at what Europe is doing. We have to look what the US is doing. Just ignore it, right? All the upside is in Asia and Africa. And that's basically what you have to look at. And then the next chart is even more interesting. If you look at it this way, it's the level of education. The more educated you are, the higher your potential earnings are. And the higher your earnings are, the more you're going to spend on the various products that you have. It's quite hard to read, I guess, from the back, so I'll put the numbers out. Right now, we got about 7.8 billion people, and most of them are already at the secondary level of education, but all the growth in the future till 2030 is going to be at the post-secondary, upper secondary, and lower secondary. The under 15 and uneducated people are fortunately going down. So that means people are going to be smarter, they want to eat healthier, they want to eat more, and they're going to have more to spend. So the urbanization plus education have a huge effect, and that's the biggest opportunity for all of us who risk our exposure in the agricultural market. A very interesting report came out literally just 5 days ago. I'm not sure anyone has seen it yet, but if you had, this was from last Thursday. I thought it was fascinating to see. These charts came out from the 10-year forecast from the United Nations and the Organization for Economic Cooperation and Development. It's a whole mouthful, but they're great. It's fascinating. If you want the actual report, the source is on the bottom. Basically, it says, India will eat a lot more butter and drink more milk. Africa's sweet tooth will grow bigger, and China's appetite for pork is going down. So things are going to be replaced. The real growth, this chart shows you the actual demand growth over the next decade. So that's 2018 till 2027. In the black table, so this one, compared to last decade, ending up to 2018. So as you see, China almost grew 15 million tons in edible oil demand in the last decade, and that's only going to be 5. But then if you look at India, that growth is actually going to increase. The same for sub-Saharan Africa. The real demand growth is coming from the same two areas. And the richer nations aren't even on here. So what will we really eat, and how does that affect us? This is the actual growth rate and the per capita consumption. The right table, edible oils, is the one here, most interesting for everybody in this conference. Edible oil rate in per capita in India is going to grow almost 40%. They're going to go straight up to the same level as the rest of the developed world. It's not going to be as high as Europe or the US, but it's going to hit the Taiwanese numbers or the Korean numbers. And that is really the opportunity. So don't ignore certain countries. Everybody is always focused on Europe or even on China. I would say shift your focus west. Pakistan, India, Bangladesh, Africa. That's where you want to focus on. And so just to really put it in perspective, China will grow only 5 million tons additional per year. It's a lot of oil, I know, but it's only 5 million. India is going to grow 10 million tons per year in demand. Now I'm going to show you a slightly different slide. This was from Mr. Lee from the SCRC. He was here at the POC. Some of you might have been here. I was here, and I was really impressed by his charts, and that's why I asked him to be able to put them up. The SCRC is the Socio-Economic Research Center in KL, and they really look at it, okay, what's going to happen with Malaysia? What's going to happen with our economics, and what are the key drivers? And I thought, this sheet is great, but see the next one, it's even better. He spoke about the mega trends here, and he identified the 5 major ones first. You can see them here. Liberalization versus protectionism. Man, he was so right. If you look at the whole world now is about, okay, it's either me or it's you. It's no more working together. The world has changed massively with trade barriers and duties coming up, and that will affect on your GDP. Europe is warming up. If you look at the other thing, the geopolitics, China is warming up to India, Europe is warming up to Russia. You have big trade agreements, the TTP, and other large global trade initiatives are being signed without the US as a partner. So there's a big geopolitical change taking place, and the world, as we know, is going to change. Another big one, the digitalization, but more on that later, big data, artificial intelligence, all opportunities that might not come to mind very quickly when you talk about plantation business, but actually have a real effect on what you do. So he created the following chart with all the effects and what do they do for you. Yeah? Wider availability and quicker data access, higher transparency and fairer pricing. It's great for the consumer. It's slightly less good, of course, for a plantation where you're trying to keep prices up. All in all, the positives show a trend to change, and I think that's going to be the main topic for my talk today. Change is there, change is coming, and change will always be there. And we do work in a fairly old-fashioned way. In the palm oil industry, we're hesitant to change, we're hesitant to invest in systems, we're hesitant to invest in new ways of working. And that might be the opportunity for the companies who are willing to make a move. And the biggest one is basically the traditional way of trading just doesn't provide the expected returns anymore. Commodities are an extremely low margin business. It's all about financing. Financing is hard because the banks don't like commodities anymore. And so the only thing what you can do is get the right way to manage your data, manage your technology, and hope for the best, or decommoditize your products. If you just say, okay, I'm going to sell CPO at whatever price comes out, we'll go to that later, your actual margins are so minimal, it doesn't really make too much sense. And on the long run, it doesn't really help to feed the world, but that's 2 topics later. First, let's go to the historical dynamics. It's pretty similar to the speech that I gave at IPOC in Medan last month. So if you've seen it already, sorry for that, but I thought it was still the same way of how we worked in the past. Commodity trading is hard. It will become even harder to generate returns, and we need to find a better way for creating value. And if you want to be an investor, or if you are an owner of a plantation, all you care about in the end is making as much money. So how did we do it in the past? In the history of palm trading, it was all about information. Everybody was waiting for the MPOB numbers come out and the SGS numbers, and we were long only, so it really didn't matter too much. As a plantation, you were long, you would sell your daily production, and you didn't really care what your production 2 years out was going to be. A refinery was long because trade flows were a bit more complicated, so you had your oil coming in, and you just sat on it, and the only ones who were going against it, and as a result, the only ones who were actually really making money were the trade houses and some of the hedge funds. And they were happy to take the opposite position because they made their money trading around the flows, and they had better market information because they had great S&Ds and they traded around those. Data releases just, they basically said, yes, your data is right, and that's why the market moved. But that has changed significantly in the last, 10 years. So we went from a limited need to risk management or hedging platforms to a more hedging kind of systematic. Long, short became more the norm, no longer just long. So with information becoming free, and it's free now, right? Everybody gets the USDA report, everybody gets the MPOB report, whether you're a farmer in the middle of, the middle of Africa or the middle of rural India, on your smartphone you get the same data at the same time as a trader in New York or Geneva or Singapore, and it doesn't make any difference, right? You can analyze it, you can trade it, or you can manage it and do it that way. Then the global financial crisis in 2008. People were looking for safe havens, so they were looking at more exposure to commodities that created more option markets that make it more liquid. Bursa was a little bit later to the game, but there's options now as well, and they work beautifully. People have to start managing their risks smarter. The real most successful companies that are out there right now, they might be here in the room, are the ones that are participating in options and option structures to manage their risk. So risk management versus long-only trading is the big change. But where do we go from here? It's all about diversification and managing risk. It's about your IT systems. It's about compliance. Governments are making your life harder. Banks are making your life harder. Shareholders are asking more and more reporting. IT systems, transparency. They want you to understand your own business and no longer gut feeling trading saying, well, I think the market is going to go up. Well, what you think is really not important. So at the same time, it's no longer just about S&Ds. And in a second, I'm going to show you a few variables that I just thought of in literally half a minute. And they're by far not complete, but most of them will have a certain impact. So one of the things already you can consider is to stop day trading or week trading and try to decommoditize your products as much as possible. If you're a refinery and you see palm oil in option markets getting close to $500 FOB, what's the risk? If you're a Unilever and you can make your products based on $500 palm, why would you not go long? It's close to cost of production. It's not going to go below. And if it does go below, you just buy more. If you're a plantation, the other way around. If you got great margins, if you trade 3,000 ringgits again, just use it. Instead of saying, okay, I'm going to call my broker, I'm going to call my conference and say, yeah, I want to have a position for a week or I want to have a position for a month. Just try to ignore it. Go for the mega trends. Go for the longer dated positions. Get the right research in. Go for seasonals. The palm market is very seasonal. It goes up before for the POC conference. It goes down in the summer. It goes up again slightly before the global conference. And you always have a Christmas rally. Well, it's hard not to make money if you trade those four, right? It is hard to make money if you don't trade those four and think you know better than the market. So, just a step back. For example, today, some of the products that I want to talk about, not really products actually, some of the key themes that I'm going to touch base on. What should we be focusing on? And again, this is not focusing on for today. This is focusing on for the next few years. And I was just briefly discussing it with Atul. What are the real changes? What is changing our market right now? This is just a few, right? There might be 50 variables that can change your market. It's not just the S&D anymore. It's not just the FX rate on the ringgit versus the dollar. It can be technology. It can be media. It can be weather. It can be anything. Basically, who knows what changes the market nowadays? It can be your labor prices, macro news, S&Ds, crude oil prices, the housing market. And on the housing market, for example, if you look at the price that real estate pays in Malaysia for 1 hectare of land is $50,000. If you sell your plantation, or if you want to buy one, you get 15,000. There's a massive mismatch there. So some of the places where there's more urbanization, like the south of peninsular Malaysia, there shouldn't be any plantations. You can make more by cutting your plantation and building houses. But that's not what we want, but it's a reality that we have to take into consideration. So without ignoring it, all you have to look at it, what is going to be the effect of all these variables on my bottom line? So I'm going to take a few, only 6, topics that I will touch on here today. I see that I'm nice on time, so don't worry, I'll finish on time. Long-term palm oil supply and demand comes straight from Rabobank, nothing new there, but just to show you some numbers because people like to. Effect of trade barriers, social media, cost of compliance, sustainability, and technological inventions. What can you do to make it more efficient from you? So, first of all, long-term palm oil supply. And with long-term, I mean, again, if you're an investor, if you're a plantation owner, what should you be doing now to make sure you have the returns in the future? So it's not about your returns today, it's about long-term capital gains on your investments. So, as already mentioned, it's all Rabobank, so Oscar is not here, Oscar Chakra from Rabobank, but if you need research, besides Oil World, that's the only sources that I use nowadays, if I get it. And Thomas is speaking next, so I'm not going to talk anything about S&Ds because it's not my core strength. Well, the Rabobank thinks, okay, production is going to go up with about 3.2 million tons. They're actually going to reduce it a little bit on the next report that comes out on the 3rd of September. But the main key thing here is Southeast Asia dominance remains and it will become even bigger. But at the same time, the spread between Malaysia and Indonesia is going to go up. Indonesia is going to gain strength and Malaysia is more or less going to stabilize. Looking at global production of all edible oils, well, there's a reason that we trade low prices nowadays. It's because there's more production than there is demand. So for the short term, this is making our lives hard. And that's why you have all these discussions last night and this morning. Yeah, what to do with these low prices? They are not sustainable, right? If you run cost of production, no one is investing. There is a lot of demand coming in the next few years, so you have to have higher prices at some point. I'm not saying whether it's now or in 3 months or in a year, but at some point they will trade higher. And it's not just palm. Soybeans are at lows for different reasons. Palm oil is low, sugar is low, coffee is low. All of them are down a lot this year. It's a general, okay, I don't like agri-commodities anymore, so we're going to push the prices down. But on the long run, no one's going to plant, and it's not going to be sustainable. Looking at demand, it's growing a healthy rate, 3.3 million tons total oils. Nothing too special. As long as we remain at these prices, demand could actually grow a little bit more. It's relatively affordable. People are getting richer. There's more money flowing into it. Interest rates are fortunately still low. So the downside is extremely limited. But that's really the only thing I want to talk about, S&Ds. I think this is much more interesting. I'm quite sure most of you might have seen it already. This will be extensively discussed in some of the other topics. It's about the rate of replanting. Malaysia is doing a fairly good job on replanting. Indonesia is lagging a little bit. But this chart shows what happens with the current rate of replanting. The base case, a high case if you replant more, a low case if you replant less, and if you just go replanting with better seeds. If you go for a no replanting case, as you can see, Indonesia will go down almost to 30,000 tons. That is just nothing, right? It's a lot lower than now. So you have to replant, and you have to get rid of all those not so efficient plantations anymore that were planted 15 or 20 years ago. Malaysia, pretty similar story. Yeah, it's more replanting is taking place, and we need to support mainly the small holders. The bigger plantations are doing a very good job on it. MPOC is focusing on the small holders, as we discussed as well in Indonesia. But at the base case, we're still only looking at about 22 million tons. Let's see, where is the base? Here. 22 million tons by 2030. That's 2 million tons then now, but it's not a lot, right? You might say, yeah, that's 10%, but it's 10%, but when you're growing so much more, you actually need more. So what is the effect of that? It can only mean higher prices over time, and higher prices mean returns on investment. So sometimes, even though it's not nice now, it's better to take these low-cost prices and low interest rates, replant your trees right now, and be ready for the next 3 to 5 years. But fundamental opportunities, basically recapping the whole S&D part, even though it was only 1 minute. The world needs more food. We had a few speakers at IPOC saying, in 2025, we need 52 million tons more of edible oils every single year, which is just huge. You have to find it somewhere. So you can get the yields up, or you can replant, or you can make more land available. To make more land available is not an option. Replanting is, and higher yields is basically the only thing. And right now there are companies that are making 9 tons a hectare. There are some test fields that are making 12 tons per hectare on palm oil. That is so much more than the world average of 3.7 tons per hectare. But you got to invest in that. So invest now and don't worry about the price moves. Plantations should invest in productions, and consumers should really considering using the low prices to lock in future price rises, because they might come. Well, actually, they will come. And most of the MNCs are doing that. If I'm based in Singapore, if I talk to the big consumer companies there, they're all looking, okay, how can we lock this price in for 2 years or 3 years or even 5 years, right? Because they've seen it in other industries. They've seen it in the airline industry, where airlines had an amazing year last year, and now they're on the brink of going bankrupt. Air India is down, Jet Airways is down, Garuda is down. All these airlines, they forgot to make use of low prices when they were there. And now you're trading $65 or $68 Brent. Their opportunity is gone. But for you, there's still some time, because we're trading low prices, and I'm quite convinced that it's not going to go up very, very fast. Next topic, trade barriers. What are trade barriers? Is it just the US versus China? Is it import duties? Is it levies? Is there anything else? And what is the effect? Well, most importantly, they're always bad. The way we sit here, and the way we have a global economy, and the way that everybody is richer, smarter, better educated, lives longer, lives healthier than ever in the history of mankind, it's because we opened up. Fewer wars and a better place. But the moment you get something going, a trade barrier, you see the effect. Here, this chart is of the British pound versus the US dollar. The risk of a hard Brexit is increasing, and the value of the pound is just crashing. Second one, Turkey, the Turkish lira versus the US dollar. The Turks have arrested a pastor in their own way and for their own reasons, and America said, okay, we're going to ban you as a country. The lira crashed. That's a huge effect on a countrywide economy. That's just not good. So barriers, in my view, are always bad. Next one, China. trade war. Remember in July when China said, you know what, the US, you can put some barriers on us, but we're going to put it on the thing that hurts you most. Soybean prices. Soybeans, bam. That's not nice if you're a farmer in the Midwest in the US. So what are you going to do? They have to get subsidies in the US. So it just blocks every growth. It blocks every invention. Can China do anything to go against it? Absolutely. Right? But all these 4 examples that you see here are basically going to be bad for both China, the US, and the world. Its global GDP is going to go down. So wherever we can, we should support fewer barriers, and we should do other things. Let's take it to a more local one. Malaysia has had its own issues the last few years. The 1ML scandal and the whole perception of the Malaysian ringgit. Looking at the prices here, you take your prices in 2013 and you take them now. This is the chart in US dollars, even though it's 2 weeks old or a week old. You're roughly trading 550 US dollars. But your actual costs of production have gone up so much because of labor costs, because of fertilizer costs. Baustat, one of the plantations here, reported in their annual report that they have an average cost of production of 1,730 ringgits. Then you had Good Hope saying that in the first quarter of this year, their costs jumped 22%. That gets you to around 2,100 ringgits as a cost price. That's only 130 ringgits of profit. But if you take this one, so you take it in US dollars, your actual return on investment for a foreign investor is about 500 ringgits lower than in 2013. Even though you have the same price and you have the same output, the return for your investor is less. So who's going to really invest in plantation right now? Land bank? Anyone can sell it higher to the real estate guys. Labor? Indonesia doesn't allow people to come over anymore. Import duties? Do you want to be in a business where it's complicated and risky to ship stuff to China? You might get bans on it. So really, even Malaysia is being hurt by all these barriers. The only thing you can do is basically make sure that there is replanted and higher yields. But is it also an opportunity? I think for Malaysia, yes. Not on a global basis, because everybody will be hurt. But on a regional basis, I would think that the US and European firms are going to move it to safe countries, and both Malaysia and Indonesia are one of them. And even China is going to put their high-tech business into other businesses as well, into other areas. So do you want to trade it? Probably not. Do you want to manage your risk on it? Yeah. And if you have a big news wire, well, you know, the buy the rumor, sell the fact kind of policy, that's the only thing you can do. For the rest, there's nothing you can gain or lose about it. You'll just have to accept it. Then a fully different story. Social media. This afternoon we're going to talk about the sustainability part. One of the questions ahead of the session was the unfair European demand on what sustainability should be. But in my view, I don't really know if it's unfair. What can social media do? This is just a few ones, right? Facebook shares absolutely collapsed. They collapsed $120 billion in one day. Minus 20% on July 26th, because they had lower revenues, because they had some news wires that were negative. Apple, other way around, they gained once $17 billion and once $8 billion. I don't know where it is, here. One investor, Carly Khan, one guy, puts up a 60-letter tweet saying, I think it's too cheap. And your market cap of a company in 2 sessions goes up $25 billion. Same with Tesla, just recently, earlier this month. Right? A one-day move of 11%, $7 billion, just because someone says, I'm going to do something. So there's nothing that can stop that, right? If Trump is going to say something against Malaysian palm oil, you will have an effect. There's nothing you can do about it. But if you can't trade it, just focus on your own business, right? Everybody else will have the same effect. Unless if someone targets your specific company, then it's a different story. And then the next sheet is going to be a bit painful for all of us here, right? This is how Europe sees palm oil, right? You have a new threat to Africa's monkeys and apes, and this is the one from June where you see an orangutan protecting his trees, right? Are you surprised that people are asking for more sustainability and don't really like palm oil? Is it fair? Is it real? The question is, does it matter? It doesn't, right? I've always learned the customer is king, so if they perceive your product as this, you have to do something about it. You have to change the perception or do the right thing, right? Demand is being shifted. So you better not say, well, we don't want sustainability, it's too expensive. What you want to do is you want to become something that people want to buy. So how do you handle social media? Basically, don't ignore it, be transparent and be open about it, and do as you say, right? You've had people saying, well, I am doing an RSPO compliant plantation, but in real terms they were not, right? share prices dropped about 20% last year for one of the plantations here. Just be open and be accepting that the world is changing around you and make sure you're ready for that. So the next one is actually more interesting for the global market, maybe less so for Malaysia. But it's the most ignored, hated and rejected topic in the market. And it's unfortunately or fortunately, it's here to stay and it's going to be affecting all of us. Compliance and the cost of compliance. My company advises companies of how to handle the changes in the market. And compliance is the one thing that no one wants to invest in. Because you don't know what's going to change and how often it's going to change. And it'll get to you at some point. But that's not what it is, because the governments are focusing on it and the regulators are focusing on it. So just a few things that I'm quite sure a lot of companies have not looked at all. This all comes from a Thomson Reuters regulatory intelligence report from 2 weeks ago. Yeah? It's not just your KYC and your anti-money laundering. It's also the data restrictions in Europe and in Singapore. You cannot put out an email with someone else's name in it anymore. So everything is going to change your business and it's going to make it more complicated and going to make it harder. So Asia is part of it, no matter how you look at it. The palm oil market is a global market. If you deal with European clients, you have exposure. If you deal with the US, you have exposure. If you deal with Singapore, you have exposure. So how much is it? Every day, 280 different rules are coming out. And this is a tracker from last year. No one can really track that. It's a daily amount of regulatory changes that will impact your business. Some are local, some are regional, some are global, but all in all, this is what it is. So who can handle that? Basically no one. We're getting short on time, so I'm going to skip it through a little bit. Do invest a lot more, because it is going to be, it's not an opportunity, but you cannot ignore it, right? Compliance is there to stay, and so you have to invest in it. Invest in systems. If you get fined, you see it with the banks. They've had about $8 billion in fines. Right? It's a huge amount. Don't get fined. Invest early, invest in your teams, and avoid the large fines. Sustainability. Next topic, right? This newswire came, one back. This one is just from last week. 90 institutional investors having 6.7 trillion in assets call on the round table for better standards. So they're increasingly focusing on it. You have to make sure that you use it as an opportunity. It's a massive risk when you ignore them. If these investors step out, your share prices will go down. If you stay in and you help them, you will actually get more investment. And it's not just the US, it's not just Europe, it's also Singapore looking at facilities on carbon credits. And in another great step, just last week, China announced that on the 20th, the China Sustainable Palm Oil Alliance, it's a cooperation between the Chinese Chamber of Commerce of Foodstuff and Native Products, RSPO and WWF, and it's supported by Cargill and Mars, and they want to go from the current 1% sustainable RSPO oil into China, they want to go to 10% by 2020, which is a huge step up, which should increase the prices for your RSPO oil a lot as well. A lot of people say, is $2 enough, right? That's roughly the value for RSPO oil right now. I would think it is, right? If you take the average plantation margin, say it's $60, average trading margin, if you ask a trader, they always say that they make $10 million and $10 a ton. The actual trader probably makes next to nothing, just asking around. Refining margin, break even, sometimes slightly positive. So you get $65 of total margin. So 2%, $2 extra would give you another 3.1% of EBITDA. I think most investors would say, okay, that's really pretty good return. Because how much does it cost? According to the RSPO, they did research. First of all, the average RSPO yield per hectare is 5.1 metric tons. That's 38% more than the average global yield. And their average cost is between $2.13 and $3.55 per hectare. So it's 70 cents per ton. So even if you get $2, you make $1.30 per ton extra for doing the right thing. So personally, I would say, go for it, right? Even though it's going to be complicated and we're going to discuss it more today, this is one of the opportunities. Because if you don't, what are the markets going to expect? At some point, they're just going to say, well, I don't want it anymore. Consumers want it. You need to get rid of the negative perception of palm oil. And the best way is to take a lead in sustainability, to take a lead in decommoditizing, focus on health, focusing on other products. So don't talk about cheap markets don't pay for it, right? People will pay for it. So to conclude this one, it is here to stay. And the countries that are currently not asking for it yet, like India, but that's growing too fast. At some point they'll ask for it. And China, they started asking, we'll do it soon enough. So we will have another discussion about it later. But like an example of it, in January this year, a book came out from, it's called The Monk of Mocha by Dave Eggers. It's about Yemeni coffee. Coffee was founded basically in Yemen, but because of all the wars, no one was looking at Yemen. In 6 months' time, from being a non-existing coffee producer, they became the highest sought-after, high-quality coffee in the world, just by changing it from bad production to a more useful one. So there's huge opportunities. Last topic for today, technological inventions. How and what can I use? There is so much out there that can make your life easier. And it's not just Oracle systems or S&P systems or other large expensive firms. Find the niche players that understand your needs. And some of them are here. The team from Tradesparent is here. They have a fantastic system that will help you manage your exposure at a very interesting price point. But also other things. So I do a lot in Singapore. I talk to a lot of private equity players. Everybody's focusing on blockchain for ownership, for traceability. How can you make sure that segregated cargo is identifiable by the consumer on the other end of the world? But also just be careful with your paperwork and in your IT data. Your positions, your prices, your exposure. Everything needs to be there as a safety measure. So don't get defaulted by not having a right overview. Maybe get rid of your Excel sheets and move it into a certain system. But even one of the things that is here, automation of production. For some reason, I just really like the Bauset 2017 annual report. They've got new hybrid carbon fiber poles that are harvesting 15% more efficient than the previous ones. They are using motorized cutters that are making the harvesting 30% more efficient. These are not even very smart things. These are simple automation things. And when labor is becoming more expensive and harder to get, that's what you want to get to. But more on the external technical development side, really focus on markets with new tools and actually enhance your margins by smart hedging and using more exchanges, using options, using databases and smart IT products. Like everybody has a smartphone. You can manage your position on a smartphone. You don't need to have a big computer for it. But you have to have a system in place that works. And with all the risk here, you see it's coming from every angle. You got to be careful there. So let's quickly recap it because the time is officially finished, right? How can we create value together? I think there's only one thing that I want to give to you in your mind for today. First of all, let's have a lot of discussions about it these days, but change is here and it will be there and you have to embrace it and you have to do the things that you can do best. Put a few quotes up, but we don't really have time for that anymore. I think the second one is really the most interesting one. Change your life today. Don't gamble on the future, right? You have to act now and without delay. If the market is changing, you have to change. And right now that means investing in higher yields, better plantation, better structures, in sustainability, in IT systems, and get everything going. So with that, I would like to end it all and give the word to Thomas Mielke in a sec. Thank you so much. And just in case you want more information or you want to contact me personally, these are my contact details, but I'll be here today and tomorrow as well. So have a great conference, and I hope you found it interesting.